We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Welcome to Finances, your home for all things financial, investment, money and lifestyle. Hosted and curated by the very talented team of certified financial planners, Burke Britton Financial Partners. This is This Week in Finances. Ben.
JB, how are you?
Good, mate. 15 minutes today. Let's nail it. Screw the bank. You sent me a TikTok earlier in the week. It got us talking about all things banking and mortgage.
What is TikTok? First, for you probably have an introduction into the world because we looked it up and I think you're probably in, maybe there's only about 5% of people your age and above actually on TikTok.
What am I supposed to be on? Instagram?
I think Facebook's for the real boomers and beyond. So,
do you want to talk about, let's intro it by saying what you saw and then how it led us down this conversation.
Yeah, so a couple of people sent it to me and I'm sure plenty of people have seen it.
We'll add it to the show notes.
Basically, there was a bloke on TikTok claiming that if you paid the bank $1 a day, that it would reset your interest every day, so you wouldn't get any compound, and you could pay off your mortgage in 5 years. Which, again, there's been some fact checking, there's been a bit of some debunking, whatever you want to call it. But again, some of his points 100% make sense, but I think there's probably a little bit of grey area in the actual reality of it all as well.
Yeah, I think the questionable bit was, you won't have to pay any interest at all and your mortgage will go from 25 years to 5 years. What I liked about it is that it got people thinking. Like, as much as it was likely bullshit, even though there's a small part of me that still wants to do a little bit more research on it, it actually gets you to think, and it probably prompts us to think, why is that so appealing to people?
Yeah, it was a little bit tinfoil hat sort of setup, but I think everyone's trying to get ahead, aren't they? And you want to try and find a little shortcut, a little bit of freebie. Sometimes when it's too good, sounds too good to be true, it probably is, and there's probably a little bit of that in it. But at the same time, the simple things about paying more frequently, sort of trying to knock that interest on the head, it makes sense, especially now with rates on the rise. So again, that plus with some conversations I've had with friends, family, clients around, what's your mortgage looking like? It's a bit of a topical thing at the moment. Everyone was sort of flexing on how low they locked it in at, and now everyone's a bit more guarded about, my bank sort of slid me up pretty hard here. So I think now it's interesting to see what are people doing about that. And that was probably what led me to a very loose agenda for today as well.
You had a couple of notes here. It's time to hit the bank up. So let's talk to that point about it really is, it's time to take some control yourself. And if you want to make some change, you've got to take some action.
And it's not necessarily that hard to do these things. I think that was the key thing I thought of it, is just the simple, time to benefit ratio, and this is pretty good. So the thing I scribbled down, and I think I'm probably guilty of this, is I'm pretty loyal in terms of just lots of things in life. The banks aren't loyal. The banks don't give a shit about you. So don't feel like you've got to tie yourselves to them and, I've been with them for 20 years. Go to them. You don't have to leave, but you can always threaten to leave. And sometimes that's enough. So very simply, I think the whole premise of what I wanted to get people to think about today is, what's your interest rate at the moment? When did you last ask the bank why it's that, and what can they do for you? So I've had a couple of people in the last week just go and ask the question. Now, they might drop their rate by 0.5%. They might give them a cash back offer. At worst, they'll say, no, you're already at the best rate. And then you can consider your options. But it might be a 10-minute call, and they're dropping rates by like 0.5% at the moment. Now, quick maths on that. Let's say your mortgage is $500,000, 500,000, probably pretty run of the mill now. 0.5% reduction is about $50 a week interest saved for let's call it a 10-minute phone call. It's pretty good value for money.
It's exceptional value for money. Again, the time spent to the reward is in good ratio. What else? When you're calling them up, what's the conversation that people actually need to have? Is there any prep work that people should be doing before they jump on the phone?
Know what your rate is. Know what you've got. Probably the more informed you are about your own situation is probably going to mean you're a little bit more confident about what you're asking. And if you have to scribble it down in front of you to go, this is what I am at the moment, this is what I'm asking for, ask it, be confident. If you have to say, oh, look, I'll have to have a look around, then the banks are in a really high retention phase at the moment, so they're not that keen to write a heap of new loans, but they're pretty comfy to keep what they've got. So that's why they're coming to the party with these things. They know the market out there. People are tight, so people will move if they can get a better rate.
Yep.
And the banks want to keep you there, so they will bend a bit. So don't be afraid to push for that.
Yep. I spoke to my bank recently, and they asked me if I had any other comparative rates. They wanted me to do a little bit of homework. But I knew that, and so I did. Yeah. I actually just sort of had a bit of a shop around to market. I happen to know a few brokers, so had a look at what the rate is, comparable, sent that to the bank. It's a really good way to be prepared.
And if you have a broker, use them. Like if you did your loan through a broker, doesn't mean you've got to go and call, Bankwest or CBA or whoever it is. Go to the broker and say, look, can you do some work for me? Ultimately they're getting a little bit of a clip along the way to be linked to that loan, so don't feel like they're doing something for nothing. And if they think, look, you know what, you are better to actually move somewhere else, it's a good opportunity to go through that process. So ask you, if you've got a broker, go to your broker first, let them do the work. They know what to say. Outsource that. If you don't have a broker, you probably should think about having one, but also don't be afraid to call your bank and ask the question.
Yeah, and you don't need to be loyal to your bank, but one of the great places to be loyal, or where loyalty is shown, if you find a good broker, they're going to work for you. Yep. They're going to work for you. They're not working for the banks. They're working for you to actually find the best possible opportunity, the best possible deal for you.
I just wanted to touch on sort of mortgage prison.
Yep.
Which is a bit of a horrible term, but for a lot of people it's a reality, sadly, at the moment. So what that is they got a loan. Most of these probably fall in the last few years. Everything looked sweet from a serviceability point of view. You probably had 10 banks falling over each other to give you a loan. Interest rates go up, things get a bit tighter. The banks, they're not really that keen in new business, more in a retention phase. You've got no ability to move sideways. So you're actually locked in to that bank, and ultimately, whatever rate they
So just explain that briefly about why people are stuck. Why are people are stuck because of the rise in interest rates? Why does that mean that you're stuck with that bank?
Yeah, so basically when the banks did their modelling on you, when you set the loan up, you had heaps of surplus cash flow, you were all good for them. They were pretty happy with having you as a client. Now, when the rate has, say, doubled or more, that's eaten into your surplus, plus cost of living has gone up. So when they run their metrics across you, you're now... you're getting a bit close to the line on what they feel is a good, comfortable position for them to be holding. So as that happens, the banks say, oh, sorry, no thank you, no, not for us. And you can, for some people, you end up just locked into that one bank where you already are.
Not in a great position to negotiate.
You've got not much power. And I think the key is when you do go to your bank, and the brokers are really good at this, is don't give too much away. Just sort of... Again, just say, look, we're having a look around at the moment, be confident, and that should be enough to them, at least give you something. Don't go there and tell them you're stuck and we're struggling. Go in there and say, look, we're looking around. Yep. And make out that you go, well, we can pick up and move if we want to.
The stuck and struggling conversation is really the last conversation that we're having. That's the conversation when people are genuinely in financial difficulty and they've got no other option.
And that's a nasty spot to be. And again, mortgage prison is going to be real for a lot of people. So you've got to do what you can. So that's, if you can manage to get that rate down, the sooner you can then take a bit of meat out of that loan and get it down, the quicker you're probably going to be able to have the option to refinance too. So you've got to work really hard when you're in that period. And I think this is where we're finding that divide. You've got the people who are a bit trapped at the moment. For those people, they've got to really knuckle down, get their cash flow tight, take a big chunk of that loan out if they can, and work hard on it to open up their options. If you're on the other side of it, it's time to sort of, again, you've got to be a bit greedy about it. There's going to be opportunities.
Yeah, negotiate with the bank. And part of it is awareness and actually knowing, like I know you've talked about a couple of clients prior to this where them having awareness about what their income needs to be, what their expenses need to be, will actually put them in a better position when they actually go back to the bank in the future. But if you don't know that, you're sort of going in blind. So being informed, being confident, having information at your fingertips when you're negotiating with the bank or when you're going to refinance is super important. And if you don't have that, you need some support with that, go and see someone, go and see a broker, come and see us, so that you can be better positioned when you're negotiating with the bank.
Yeah, definitely. And I think it's easy for people to just let these things go in the past few years because rates were pretty low. So the difference between being on 2.15 and 2.25, you don't really notice it. But now we're literally looking at you're dropping like 10% of your interest rate. Like you're going from 5.5 to 5 in some circumstances. I had someone last week who did that just from a conversation. And they said, I didn't get any cash back, but dropped 0.5%. It's probably $50 a week you've just saved. So it's pretty good.
It's a sweet deal.
Yeah. So hit them up.
Anything else on the mortgage front, Ben? We might do another podcast on the TikTok guy. We're going to do a debunk.
Yeah, we might have to run some of our own numbers on that. It's interesting at the moment you get all the thread of the debunkers and the counter theories. It's such an interesting place on any social media platform. Someone comes out with a theory that looks like you can beat the bank. Someone comes out and says, it's probably not as good as you think it is. And then you read the comments and everyone's saying, you just must be supporting the bank. Like everyone's a bit angsty at the moment.
Yeah, I like the debate. I think the way to outdo bad ideas is to have better ideas. And the conversation, at least, again, it's prompted us to talk about it and do a 15-minute podcast on it. Hopefully it prompts people out there to think about their own circumstances. Maybe there isn't a magic bullet that's going to see them paying no interest ever on their loan, but it got people talking, and hopefully it gets people out there thinking about what they can do to get a better rate, look after their cash flow and take control of their situation. That's 12 minutes, Ben. Anything more?
No, screw the bank.
We hope you enjoyed today's episode. If you're keen to understand more about how financial advice could benefit you, follow us on Instagram, Facebook, and Twitter at Burke Britton FP, or Google Burke Britton Financial Partners. Check out our client reviews, testimonials, and make a time to meet one of our certified financial planners by clicking Book Now on our website. Thanks for listening.
Any information contained in this podcast is of a general nature only. No account was taken as to the objectives, financial situation, or needs of any particular person. Therefore, before making any decision, listeners should consider the appropriateness of any information with regard to their particular objective, financial situation, needs, and seek independent advice from a licensed professional specific to their circumstances.
All right, hit it.
That translates to don't be a moron and act on what some random person says on a podcast. Take personal responsibility. Do your homework. Ask questions and speak to an actual human that knows what they're talking about before you do anything. PP Financial Solutions Proprietary Limited, trading as Burke Britton Financial Partners, are authorised representatives of AMP Financial Planning Limited, AFS, licence number 232706.